All right, ladies and gentlemen, welcome to the live webinar brought to you by TrainHR. My name is Ajay and I'm going to be your host today. On behalf of the TrainHR team, I would like to thank you for being part of this event. Well, the topic for today's webinar is HR metrics for the human resource executive. And it gives me immense pleasure to introduce our speaker for today, Marna Hayden. Now, Ms. Hayden is founder and president of Hayden Resources Inc. She has 30+ years in the field of human resource management and is certified as a senior professional in human resources. Hayden Resources Incorporated provides management and human resources consulting and outsourcing services to small businesses and nonprofits, and specialized services and training to larger organizations. Prior to founding Hayden Resources Incorporated, Ms. Hayden held senior offices in the banking, retail, and service industries and served as an advisor and adjunct faculty member for several colleges. Marna, it's a real honor to have you with us to present this webinar. Now, ladies and gentlemen, before we begin, I would like to inform you of the program outline for this training session. This webinar is for 60 minutes duration. And first, Marna will take you through today's webinar, highlighting the areas that will be covered, and she would then share with you her presentation. We would like to inform you that all participants, once part of this teleconference, have been placed on mute and will remain so until the Q&A begins towards the end of the webinar. It's for the purpose of avoiding discontinuity and for allowing the presenter to speak clearly so that everyone present here can get maximum benefit from this webinar. But we also request all to hold back your questions until the question and answers session. Then we have about 10 to 15 minutes time allotted for the Q&A, during which your questions will be answered. Well, in case you come up with questions during the presentation, please feel free to send your questions to me by chat message, and we'll have them addressed during the Q&A. And just a reminder, dear attendees, if for any reason you get logged out of this training session or the teleconference, please follow the same procedure to join in again. I believe that we are all ready to start, and I request Marna to take it from here. Marna?
Thank you very much, and welcome to all of you. Today, our learning objectives are to really understand or clarify the links between human resources and organizational performance through metrics, and to select and calculate the appropriate metrics for you and your organization, and taking a look at the balance between cost and the value that your programs create. To use metrics in goal setting, yes, and to improve productivity, to communicate how HR as a partner affects the total company success and the bottom line. So those are the learning objectives we have today. Human resources importance. Now, particularly coming from the human resources field, I think that the work that we do, if we do it well, contributes a great deal to the whole organization and its performance, starting with the management of hiring, development, retention. All of these things come under HR, and they make a major difference to the success of your organization. Advancing your company's objectives and goals is done through people. And who do people come to when they have people issues? They come to human resources. Your workforce is both a major asset and a major expense as well. So you need to choose your resources well and manage them well. And human resources, all of the initiatives on that page, human resources spearheads those initiatives and is always playing a very important part in making them successful. So therefore, we'll move on to the whole area of accountability. Human resources needs to be accountable for measuring the effectiveness of how the human resources programs succeed. HR should also be able to validate areas of success and identify where we need to improve, what areas need to be improved. HR strategic goals need to be linked to the strategic goals of the organization. It is very important that your head of HR is involved in the strategic setting of the objectives for the company, the strategic management of the company, and therefore can waterfall what the company's objectives are and make meaningful plans within your department and throughout your organization. And HR must identify the initiatives, select the metrics which are going to be most meaningful, not only to running a good HR department, good HR programs, but what your current goals and your strategic objectives are for your company this year and in the future. Human capital ROI, or return on investment. If people are responsible for profits, one of the major measurements that you should be taking a look at is measuring revenue against employee expense. This is one of the more common measurements. So you take the revenue of the company minus the operating expense, minus compensation and benefits cost, and divide it by compensation and benefits cost. And you can take that figure and you can analyze it and compare it against the previous year, against any goals you may set for that figure, against the competition of peer companies or organizations, and you can get into more detailed ratios which identify what factors are causing the good or the areas that you need to improve. But this is a good measurement for return on investment. Productivity and cost control. Measure HR expense as a percentage of total operating expense. Now, I hope that all of you know how to read your balance sheet pretty well and understand the key factors in the company's balance sheet. And it's very easy to take a look at your total operating expense and your total HR expense, and you take HR expense divided by total operating expense to get that particular ratio. Now, I think that it's very important to partner closely with your chief financial officer or your controller or your accounting area, because they're the ones who set up the statements of your company and understand the expenses, and the expenses that you incur are going to be in that statement. So you need to know where to find them and how to conduct these basic ratios. You can compare, once you get the HR expense to the total operating expense, you can compare this again to a standard. You can compare it to a previous time period, or again, you can compare it to similar types of companies. And if it's a public company in any way, you certainly can get the balance sheets of those companies or their reports. If it's privately owned, you may not get those figures, but you may have an organization such as for your particular industry that might be able to give you benchmarks to compare against. Salary as a total percentage of total operating expenses. This is another one that's used quite a bit. Salaries are often the largest area of operating expenses for organizations, and so the ratio is the total amount of all salaries divided by the total operating expenses. Now, some people prefer to use total compensation, which would include both salaries and benefits, divided by the total operating expenses. You're going to have to decide what is right for your company, what your CEO likes to see, how your senior management team can relate to the figures. One of the reasons that I use sometimes total salaries to total operating expenses is because it varies so much within different industries. And here's an example. This source is when I use SHRM, it's the Society for Human Resource Management, for those who are not familiar with it, the largest human resources organization. And what is really interesting is how different industries are. If your company is in the healthcare, 52% is the average percentage of operating expenses that salaries take up. That's a pretty large amount. And most for-profit service companies, educational services companies, These all around 50%. Now you drop down into, if you're a manufacturing type of company, it drops all the way to 22%. In construction, mining, oil, gas, 22%. And when you get into retail, it's only 18%. So there's a huge variation that is in how much you spend on salaries compared to operating expenses between different industries. And when you're working, of course, you want to compare against your industry. Now, revenue measures. One of the measures is revenue divided by FTE, or full-time equivalent employees. Net income before taxes per full-time employee, full-time equivalent employee, rather. And then there's revenue minus operating expenses, minus compensation and benefit costs, divided by the total number of FTEs.